So as we look over the past several years, this has clearly been a period with economic ups and downs. Technology stocks, gold, the housing markets have all moved higher, only to fall rapidly. This type of boom-bust cycle is commonly called a bubble, where certain investments move up too quickly, then move lower to the disappointment of investors. Well, there is talk that perhaps stocks are now in a bubble, but are we? In this morning's U.S. Bank Economic 360, our very own Jim Russell, U.S. Bank's senior equity strategist, is here to talk about what we should be looking for and be aware of as we approach 2014. Good to see you, Jim.
Brian, good morning.
So, what is this talk of the bubble all about? Can you give us an example first of what is a bubble?
Yeah, it's a good question. There is a little bit of talk in the media about are stocks in a bubble. Stocks have clearly had a very good year, and people are starting to think, gosh, is there downside risk? Let's talk a little bit about that. You know, one of the bubbles we've seen lately has been in the residential real estate markets. Now, the price trend there has been very rapid. Beginning about the turn of the millennium, you can see a double-digit annual price increase topping out in about 2006 and a fairly dramatic decline. Now, in the tri-state area, we really didn't experience that rapid run-up, nor did we experience the rapid decline. Several reasons for the house price index increase, and of course the decline as well. A couple of things that we would point to would be lower mortgage rates. In fact, historically or maybe even generationally low mortgage rates. Speculative home buying. People did not feel that home prices could decline at all, so just kind of moving forward with that, perhaps a little bit more demand than supply, and belief that home prices, of course, would never fall. So trees do not grow to the sky. Emotion got the best of most people there.
And that graph really illustrated that bubble. I mean, it popped.
Very dramatic.
So gold investment 3 or 4 years ago was considered all the rage. Was that a bubble?
We think so as well. The same sort of dynamics were at play. There is a price chart that we'll bring up in just a second. Again, the same sort of things going on there, but maybe a little bit more global in its perspective. Central banks in Russia and Southeast Asia were active buyers. There was tremendous amount of jewelry demand in China and India for gold. Fear of a lower dollar, fear of inflation, a few other things at play there as well. The inflation never did really come about, and so gold has fallen, and we do think that also had elements of a bubble.
All right, prior to this past week where we saw a pretty general decline, stocks were up over the 16,000 mark at the Dow Jones Industrial. Do you see that as a bubble?
We think that this year, Brian, has been really a catch-up year for the S&P 500 and the Dow Jones Industrial Average and other stocks as well. We thought, frankly, as we sat here last year, stocks were too lowly priced, and perhaps a little bit of a coiled spring action propelled stocks forward. You can see the price graph over the last 25 years here, and only recently have stocks broken out of that kind of range. We'll tell you that companies are at an all-time high in terms of profitability. Inflation remains low. We're increasingly getting data that the job market is improving and that things slowly but surely are improving both for the United States and globally as well. So we do think that despite the fact that stocks have run pretty hard this year, frankly, that there's a good fundamental support for them. Dividends are high, all-time high on the profitability. They sell for about 15 times earnings, which is approximately the long-term average. We do not think the S&P 500 is caught up in a bubble at this time.
Good. Thanks for bursting my bubble this morning. We appreciate you and U.S. Bank.
Great to be with you.
Thank you so much.